Okay, so if you look back in our beautiful pirate map of the basics, of course, we covered very basic stuff first. We saw of how to make big zones into smaller refined zones. Then we saw also of how to take advantage of if it's a continuation or reversal. We used multiple time frames to even refine it more. We made some fun out of structure, a little shit a little bit about it, but of course can be aware that this is something that can help you specific points also. Then also we identified of how we potentially could use the advantage of order flow if we identified the right moves later on. Then of course of how we can add into the trades. And now of course we also want to show you again if it's continuation or reversal setups. Of course, again, we can trade order flow. Like let's say we have something like this, right? And maybe this is our inducement later on. Price content reversals in here, so that would be order flow to the reversal side. Or of course, if you have something like this, inducement to the low side, and then trading order flow into the continuation overall, right? That's both stuff we will cover now, and slowly but surely be connecting all these basics, and then show you soon of how to master these basics. Okay, so Sakpa, if you want to go and walk us through the journey of continuation and reversals.
Lovely jubbly. So continuation and reversal, what we will be doing is we will be using, so you can see there's two. So of course this one, we will be covering the continuation and reversal with all of our other points that we have here from 1 to 6. So if we go to the next slide, we have our continuation. Now here we have price action trending bullish, and it breaks the internal structures, and likely we get mitigations here, like with imbalances as you've been taught. And then we have our continuation leg, which breaks the main structure. Now with the reversal, it's the exact same thing. So again, in combination with supply and demand, you have your supply zone in this scenario, you have your imbalances over here, and then of course the mitigation in itself. Now in combination with structure, you have your breaks of internal structures, and then of course the reaction in itself of course breaks the main structures over here. So again, continuation is going up, and then reversal is of course the reversal itself.
And of course, very important to also keep in mind, if it's a continuation, again, it's not only up, it can be down also. Of course, it's just in line with the overall direction. And again, we don't need to reversal trade everything. We don't need to force reversal trades, but be aware, slowly but surely we're digging into the more interesting stuff. That of course, they're always loving to show this false pullback trends and whatever. Then again, we have some sort of inducement, maybe do something to the left, which is even nicer. At some point, we will show you, of course, everything that's going on. Then, of course, we can have a continuation. We can wait for additional confluences, like easy stuff like break of structures, as Sakpa said, into mitigations here, and then continuing higher, right, in this scenario. Or, of course, reversals. If this, again, has a significant role, which we will find out later of what this might be, right? Again, already notice higher time for mitigation things if it reacts from some sort of supply demand areas, right? And of course, then we can have some sort of break of structures confirming the direction if everything else before that is in line. Again, we dig into it, then again, see what they're doing, building these liquidities, right? Taking it out, and then order flow reversal, but continuation of away from our traps in here, but technically it's a reversal over all the trend, right?
Okay, so what we have here is we have our channel of liquidity, we have the trend line of sellers, everyone selling down here. At the same time, we also have buyers in this channel. So essentially we have both buyers and sellers in the market. Then we essentially have, of course, you'll be taught later this, your inducement, and then of course an imbalance over here into a POI in the purple box we have here. And upon that we have an internal structure here as well as the main structure. So everything in between is your internal structures, and then of course the continuation bullish. And then to the right, we also have a similar scenario where we have all of this liquidity building in the form of a channel. Same thing here, we have our equal highs, and then of course our inducement high. And then what we have is the internal structures being broken and an imbalance zone. So imbalance, of course, being between there and then your POI from there to there. And then, of course, once price mitigates, we get the continuation bearish, of course, breaking internal structures and ultimately breaking the main structure to the left.
Yes, and
So-
that's something, a very example where structure actually can help you, right? Again, if you think like, okay, maybe this took out the highs, or why not looking into this one? Again, this is a fun example because we obviously know exactly later on of why this is 100% a no-no zone anyway. So that's a promise. We will dig into that, right? Of why this is never a spot you look for sells in here. But guess what? If you just look at this chart in here, you would never know, but obviously you will know very soon of why not this one instead, right? But then also, again, this is technically the push, right? It never gave you some sort of internal break of structures or break of structures overall, then obviously takes it out. Again, this one is a 10 out of 10 confirmation trade later on for us to pick for an inducement, POI, right? And of course, then it technically breaks the structure points and then comes all the way back to the extreme, mitigates that, and then of course takes out the structure to the left as well.
Lovely. So we have another example here to the left. We have again our inducement high, and then of course price break structure. So from this point to this point is essentially our leg, and of course that's the point of structure that's broken. Then what we have, of course, if I just remove the drawing, so you can see the imbalance. Essentially your imbalance starts from there and technically it's all down there. I mean, at one point it was actually down there until it pulled back, and then of course our POI in itself is the mitigation point to the left, of course. Then we continue for our continuation and break structures along the way, usually to the left as well. Now to the right we have another scenario of the same thing. Again, we have liquidity in the form of this channel. Not the nicest drawing. Again, to the high side we have people buying as well as selling when it touches the trend line. And then of course to the left, again, they're not the same chart, just to iterate on that. There's a split there, but to the left usually is a POI of some sort or inducement of this liquidity. What we have then is fractal lows over here. Before that we have, of course, price break those fractal lows, and then of course a POI with the imbalance between there and there. Price taps into the imbalance, and then we start to break structures to the downside all the way to the left and get our reversals.
Yes, in this example, again, always note that you have some sort of these liquidity buildups before, right? And again, even if you coincidentally, this example, that's actually how it should look like in real as well. If this final inducement of this buy channel, look to the left, and then there's some sort of POIs, which coincidentally this actually is the case in here, then again, this could be definitely very interesting for after break of structures. Again, the only time its structure makes sense to look at, right? And then of course, fills the imbalances, taps into this point of interest, and then continues, or technically now reversals. Okay, perfect.
Lovely. So next example, again, it's the same thing. So we have a channel being built to the higher side. Everyone's buying in the form of whatever trend lines. If it's your breakout traders, whatever it be, everyone's buying. And essentially we have our inducement high. Then what we have, of course, is price react from there. And at this point, it's very hard to see, but you can see the imbalance over here, and then you can see the POI. So essentially coming into the POI from the imbalance to the left. And then upon the continuation, we get the same thing. So now we've broken structures to the left, but we also now have the same thing where we have our imbalance zones between here, as well as a POI, well, the only remaining. Okay, so then what happens is price then mitigates into the POI, and then we get our continuation downwards. Again, breaking the main structures to the left over here. Then what we have going forwards is another example. So what we have here is essentially liquidity being broken to the downside. We have our inducement, and then what happens is this structure point here is broken. So we have our break of structure there. And then what we have is our imbalances from there to there into our POI over here. And then we get our reversal over here. And again, taking out structure points here to the left, and ultimately the main one over here. So now the next one we have is, again, a continuation example where we have price breaking structure here to the left. And then, of course, so from this point to this point, then we get a pullback into our POI over here. Alongside that, we have multiple imbalances over here between the 2 points into the POI. And from that point, we get our continuation bullish again. So going forwards, another continuation example is we have our channel of buyers at this point. Again, people trading support, resistance, whatever. So everyone is buying. Then we have our inducement low. And then, of course, our internal structures are broken at this point. So from this point to here, we get our pullback into our POI at the bottom over here, as well as covering all of these imbalances on the way off the pullback. And we get our continuation bullish, taking out the structure to the left. Okay, so another reversal example is we have, of course, our reaction from there till here. We have our main break of structure, and then, of course, imbalances on the way over here into our POI here. So we mitigate this POI. Again, it can be used for multiple time frames. Maybe this is a 5M or a 1M. You use your time frames to your advantage. You don't necessarily need to refine it too much. For example, this could be your 5M POI, and that's good enough. Continue bearish, taking out structure points to the left. Of course, you will be taught this in the future lessons of why you wouldn't take zones like such over there. Okay. Next example, again, it becomes very repetitive. So I'm sure you can figure this out yourselves at this point, where we have, of course, our structure points here. We, of course, break the structure here for the sellers. And then, of course, we have our major imbalance from there to there, and our mitigation into the POI only for price to then continue. And then, of course, going to the next slide, we, of course, have the same thing where we have our minor breaks of structures over here. We have imbalance forming between here and here. And then we get, of course, our POI mitigation over there. And this takes out, of course, all the structures to the left, all these little bits down here for our continuation. Okay, so another example, we have, of course, our structure point here. It breaks out this structure point over there. So between this leg, we have, of course, an imbalance over here, as well as a POI. Price comes back upon a pullback and then mitigates this POI for a continuation, then breaking these structure points as well to the left. Now, so we have now completed the continuation and reversal. There's plenty of examples on that. And we will be covering liquidity. Now, liquidity is quite a, I would say, varied topic. There's a lot of examples of liquidity. And of course, you'll be taught those very soon.